Tether's dominance may weaken due to stablecoin legislation. The dominance of the Tether stablecoin could be undermined by new regulatory proposals in the United States, according to a report by international rating agency S&P Global Ratings. Experts believe that clearer cryptocurrency market regulations could encourage banks to enter the stablecoin market, potentially weakening Tether's leading position as new digital asset custody providers emerge, enhancing competition. The proposed regulations could give banks a competitive edge by capping the issuance volume of stablecoins by non-banking institutions at $10 billion, the S&P report details. Recall, a stablecoin is a type of cryptocurrency that serves as a foundation in crypto markets. Last week, U.S. Senators Cynthia Lummis, Republican, Virginia, and Kirsten Gillibrand, Democrat, New York, introduced new legislation aimed at defining how these coins will operate within the country. Currently, the U.S. dollar is the most popular peg for stablecoins, but most of their issuers are not subject to specific U.S. regulations, notes S&P. This situation could change following the introduction of the stablecoin law last week. The new rules could provide banks with a competitive advantage, limiting institutions without a banking license to a maximum issuance of $10 billion, wrote analyst Andrew O'Neill. The market capitalization of USDT from Tether is $110 billion, making it the third largest cryptocurrency, according to CoinDesk. Circle's USDC is the second largest stablecoin with a market cap of $34 billion. Both cryptocurrencies are pegged to the dollar. Hedge funds are starting to take a closer look at meme-coins amid stunning gains. Hedge funds are increasingly turning their attention to meme coins, lured by their impressive profit potential, reports Bloomberg. In December last year, when the meme coin Dogwifat became a hot topic in the crypto community, California-based hedge fund Stratos had already launched a liquidity fund, investing in this beanie-wearing dog emblazoned token. At one point, the token's price surged more than 300 times, helping the fund achieve a 137% return in the first quarter, significantly outperforming the general growth in the crypto market. However, since reaching its peak last month, the value of Dogwifat has dropped by more than 40%. Stratos, which counts renowned venture capitalists Marc Andreessen and Chris Dixon among its limited partners, is not the only hedge fund investing in meme coins. Major hedge fund Brevan Howard has made modest investments in the sector. Recently, Pantera Capital expressed that meme coins are here to stay, and that trading meme coins creates tremendous opportunities. Recent data show that meme coins have the highest trading volume on so-called decentralized exchanges, with a total market capitalization of approximately $54.7 billion. Nevertheless, many in the crypto market remain skeptical about meme coins, which, unlike more traditional cryptocurrencies, are usually not linked to specific projects and are often inspired by internet memes. Their trading strategy is often driven by speculation based on active promotion on social media. The first meme coin appeared in 2014, and since then, tens of thousands of such coins have been created, with Dogecoin ranking 8th among cryptocurrencies with a market value of about $22 billion. While many private investors have lost money and some have made fortunes on meme coins, professional investors largely stayed away until the recent boom in the crypto market. With the advent of applications that allow creating and launching meme coins in minutes, the process is becoming increasingly accessible. Blockchains like Solana and Base, offering low trading fees, are filled with such tokens. Meme coins are also beginning to appear on major exchanges. Partly due to improvements in infrastructure and liquidity for some meme coins, hedge funds are beginning to feel more comfortable following retail investors and promoters of meme coins who have long seen them as an opportunity for quick, substantial profits despite the lack of traditional fundamentals. Pally from Stratos noted that as hedge funds pay more attention to meme coins, they begin to be taken more seriously, which could lead to increased interest and understanding of this concept over time, similar to what has happened with cryptocurrencies in general. He also did not rule out the possibility of funds specializing exclusively in meme coins, akin to those focused on NFTs. Tether is stepping up its fight against sanctioned wallets. Tether, the issuer of the USDT stablecoin, has announced new measures to block the wallets of organizations and individuals subjected to sanctions by the U.S. Treasury Department. According to a report by Cointelegraph, any payments to sanctioned addresses will be frozen. A Tether representative emphasized the company's commitment to halting transactions to addresses listed on the OFAC SDN list, aiming for swift action to block such wallets. The announcement follows reports that the Venezuelan state oil company PDVSA had used USDT to circumvent sanctions. AML firm BitOK published a list of 836 addresses currently blocked by Tether. Tether's reinforced actions to block sanctioned wallets demonstrate its dedication to complying with regulatory requirements and preventing the use of USDT for circumventing sanctions. These efforts are likely to enhance the transparency and trust in the stablecoin, as well as reduce the risks of its use for illicit purposes. After halving, the demand for Bitcoin will be 5 times higher than the supply. Following the Bitcoin halving on April 20th, analysts from the cryptocurrency exchange Bitfinex predict that demand for the digital asset will soon exceed supply by 5 times. This anticipated surge in demand is attributed to a decrease in the daily issuance volume, which is expected to fall in the short term to approximately $40 to $15 million per day, according to experts. In a few months, this figure could drop even further to $30 million, as a result of several companies exiting the cryptocurrency mining market and increased mining costs for smaller miners. Given the average daily inflow of funds into spot Bitcoin ETFs, which stands at $150 million, the demand for Bitcoin is expected to significantly outstrip supply. Additionally, miners will likely reduce their Bitcoin sales to replenish coin reserves. Prior to the halving, many companies sold part of their BTC to upgrade their equipment, and they are now looking to restore their balances. Experts have also noted that a number of investors are moving their assets under direct management, withdrawing them from exchanges, which will also impact the price of the digital gold. This shift indicates a broader trend of increased market maturity and investor sophistication in managing cryptocurrency assets. Fidelity raised $40 million in its largest single investment from advisors. Fidelity's Spot Bitcoin Exchange Traded Fund, ETF, has set a new record for the largest single investment in a Bitcoin fund, attracting $40 million from 2 traditional U.S. financial advisors. According to Bloomberg analyst Eric Balchunas, Legacy Wealth Management and United Capital Management of Kansas each recently invested $20 million in shares of the Fidelity Wise Origin Bitcoin Fund, FBTC, joining the fund's largest shareholders. Legacy Wealth Management oversees assets under management totaling more than $359 million, while United Capital Management of Kansas manages over $436 million. These figures are part of recent Form 13F filings with the U.S. Securities and Exchange Commission, SEC, for the first quarter of 2024. Investment research firm Fintel reports that Bitcoin, BTC, constitutes 6% and 5% of the respective fund portfolios. This significant investment underscores the growing confidence and interest in cryptocurrency as a viable asset class among traditional financial institutions.